Hey everyone, and welcome to another episode on the Joan Wick channel. And today we're going to go over breaker blocks. If you remember in the last video, I mentioned that we're going to go over all these concepts each video. And so over the course of the series, we're going to build on each concept on this diagram that we have here. We went over buy side, sell side, which forms part of our external range liquidity, and we discussed our fair value gaps, order blocks, and now we're going to head on to breaker blocks. So what breaker blocks are, they're essentially order blocks that fail to hold and now act as a resistance key level. So if you remember here how order blocks work, usually this is where our price would retrace and continue direction, but instead how breaker blocks work is the order block fails to hold, we shift market structure, and so price retests that breaker block as a resistance level, and so continues the new market structure. So if we look at how our candle example looks like, we can see that our breaker blocks are measured differently to how our order blocks are measured. Remember, our order blocks would be measured from the bodies of the candles, the whole candle or series of candle, and this would be your order block. What would happen is you take your entry, but as you can see, this is way too wide of a stop loss to make an entry, and this is why our breaker blocks are useful, because our breaker blocks come right before our order blocks. We measure them like this. Move this aside. We measure breaker blocks from the wick to wick. From wick to wick. It is also measured from a single candle or a series of candles like this. Just remember that the breaker block is the leg right before our order block. You can see that price respects this breaker block, and so we can enter with a much cleaner risk to reward ratio. You can see if we have our stop loss just above our breaker block, we can have a nice target of 1 to 2 as our minimum, and that's essentially how our order blocks work. If we try and catch this exact trade on the chart, I will show you how to do that. If we go back to the day, this was the 9th of December. Can just fast forward. We see that we have our previous day high right here, and we've got sell side liquidity resting here. So sell side and our buy side. You see that price sweeps buy side, but we don't display it, so therefore we just create another high. Let's fast forward. Price sweeps, then what? We break structure. This will be our market structure shift right here. Market structure shift. And after we have this market structure shift, what happens? We are marking out our breaker block from the top to the bottom of the wick. That's our breaker block. So we look for entries once we see price retrace into that order block. See price retrace into that order block. If we zoom in, you can see our price action on the 5-minute. You'll see our smaller sell side and buy side liquidity. Measuring there. You can see we tried to break it a couple times. Eventually make a new high and a new low, meaning we have new buy side and sell side liquidity. So as you see, after we break our buy side liquidity, but we don't displace, we know that sell side liquidity is next. So you can either enter on this sweep, because we know that we are expecting this breaker to hold, or you can wait for further confirmation on the 1-minute. So what happens, we sweep liquidity, we wait for a market structure shift, and we get one over here. That is our market structure shift. And so after that, what we do, we wait for price to sweep liquidity, or to retest liquidity. So we have our fair value gap over here, and believe it or not, we have another breaker. Now remember, I said the breaker block is the leg right before the order block, and that can be a single or a series of candles. So this would be your breaker block. So let's see what price does. Price goes and retests this fair value gap, breaks the fair value gap, therefore this fair value gap is invalid, but we're seeing that we still respect this breaker block. So that is where I'd say your entry should be. If I had to put my entry, I would put it either at the breaker block or at the midpoint of the breaker block, or the consequent encroachment, if you remember in the previous videos. But let's say you had your entry here at the breaker block, your stop loss would be either above the breaker block, or you can have your entry, if you entered maybe earlier, or if you entered on a higher time frame, you can simply add your stop loss above the high time frame breaker. Just gives your trade more breathing room in case we come up here again. But we're more confident in our trade. Let's say we're more confident. Where would we target? Our first sell side would be our target, our next sell side liquidity, and so on. If we had our stop loss above the giant breaker, let's see here, what would our okay, that would not be a great risk to reward, but in any case, I would say if you're on the high time frame with entering your trade, you want to target your high time frame sell side. So if you entered at this sweep of liquidity, I would say definitely have your stop loss up here. If you entered on the 1-minute, I would say rather have your stop loss on the lower time frame breaker, as that is where your trade would be invalidated, on the lower time frame. And yeah, you would just target the sell side liquidity as your trade plays out. struggling to get this to but in any case, let me show you that how this trade works out. You could target the rest of the sell side liquidity resting here and here, and you would still be winning that trade, as you can see. So that's how breaker blocks work. They're essentially old order blocks that fail to hold, and since market structure shifts, we retest that old breaker block and it now becomes a we retest the old order block and it now becomes a breaker block, and so we can use that as a level of entry. And yeah, I think that's all we have on breaker blocks. I will be discussing rejection blocks next, and I'll see you in that video. Please like, subscribe, and follow for more content. I'll see you in the next one.